Good morning, members. It's the appointed time. We have a quorum. I call to order the meeting. This is the meeting of the Bills Committee on Banking Legislation, Miscellaneous Amendments, Bill 2026. And we have invited the officials from the administration to join us. So I have to declare an interest. I'm in the banking industry. Does any other member wish to declare an interest? Mr. Chen Hao-kong. Chairman, I also have to declare an interest. I work in the banking industry. Mr. Vincent Cheng. Ms. Carmen Khan. I work at the bank. Mr. Chu Lap Wai. I also work at the bank. A reminder to members, the legal advisor has let us know if we have multiple meetings later on, we will have to declare this interest at every such meeting, so please bear that in mind. Next item on the agenda, we will have to consider whether we want to invite submissions from the public on this bill. Members can consider inviting written submissions from the public. So your thoughts? So we all agree on inviting written submissions. The Secretariat will put up a notice on Legico's website to invite public submissions. As per our convention, the Secretariat will also let the 18 district councils know this arrangement. We now move on to the policy discussion of the bill. I now invite Mr. Ho, Mr. Francis Ho, Deputy Secretary for Financial Services and the Treasury, who will take us through the paper. Over to you, Francis. Thank you, Chairman. The Banking Legislation Miscellaneous Amendments Bill 2026 mainly aims to ensure that our banking legislation remains fit for purpose in terms of meeting the industry's needs and the future, given the evolving landscape. Our previous amendments to our banking legislation were targeted, so they were about meeting international standards or for launching specific measures. Last year, with legislative support, we amended our laws to implement the sharing of a platform for sharing data on corporate and individual clients. So that was for combating money laundering. To further strengthen our foundation for regulation in the banking industry and also to bring our regulatory framework up to date, we have proposed the changes here today. This is to reflect the latest banking practices and regulatory approaches. Second, we also want to address the specific issues identified from our supervisory experience over the years. The third aim is to further align Hong Kong's banking regulation with that of other major international financial centers. This legislative amendment falls into 6 areas. First, creating a regulatory regime for bank holding companies. Under the existing banking ordinance, there is no direct regulatory powers for the monetary authority over such holding companies. We simply impose additional conditions to exercise oversight. So we propose adding provisions to empower the monetary authority, or MA, to require a controller of an authorized institution or AI incorporated in Hong Kong to establish an immediate holding company incorporated in Hong Kong, and also to impose regulatory requirements. So that includes the maintenance of capital, liquidity levels, and also the appointment of chief executives and also board and directors of the board. We also propose empowering the MA to take action against non-compliance from authorized institutions. This will lead to greater regulatory clarity and certainty. The requirements we propose are broadly consistent with the existing practices under the conditions imposed at the moment, so we do not expect any major extra compliance burden. The second limb of this proposal is engaging skilled persons. Given the complexity and technicality of banks' operations, and this has to do with fintech and digitalization, the MA may not always have the technical specialists in-house. That's why we propose allowing the MA to appoint skilled persons when necessary to discharge supervisory functions. The MA will also be able to get authorized institutions to appoint skilled persons to submit reports to the MA. The third part is enhancing enforcement provisions. Under the prevailing BO, there are no intermediary disciplinary options for the MA, such as reprimanding or imposing a fine or barring an improper person from taking office as a director, etc. And that's why we propose empowering the MA to take intermediate disciplinary actions based on what we have seen in legislation elsewhere. The fourth part is streamlining the current banking system. Instead of a three-tier system, we will have a two-tier system instead. Now the three-tier system consists of licensed banks, restricted licensed banks, and also deposit-taking companies. This regime has been in place for over 4 decades. The market has evolved. The regulatory frameworks have also changed. Under the existing regime, there are just 11 DTCs left. In terms of the total assets and customer deposit, they make up less than 0.1%. We no longer see the need to maintain the tier of deposit-taking companies. That's why we propose incorporating DTCs into the category of restricted licensed banks. To streamline or simplify the regime, there will be a 5-year transitional period for existing DTCs. There will be a streamlined approach for them to become an RLB instead, or they can also choose to cease their deposit-taking business in an orderly way. The fifth part consists of technical amendments. And for the BO and the related subsidiary legislation, we propose a range of technical changes, and that's to ensure greater regulatory effectiveness and clarity, and also to bring the provisions into line with the latest law drafting conventions. The last limb of the proposal has to do with 2 pieces of legislation. First, the Financial Institution Resolution Ordinance and also the Hong Kong Association of Banks Ordinance. Between 2023 and 2025, the Hong Kong Monetary Authority conducted multiple rounds of public and industry consultations. There were also changes proposed in response to concerns from the industry. Our current proposal has the broad support from the industry. Between 2024, that is October and December 2024, and also in May this year, we consulted the panel on financial affairs on this proposal. Members also generally supported our proposal. To create the most favorable and attractive business environment, the government has always considered the latest market development and the market conditions to continuously enhance our financial regulations. These changes proposed here will ensure that our regulatory framework will remain robust and be conducive to the development of banks, and also it consolidate Hong Kong's status as an international financial center. So that's my opening remarks for this bill. We welcome questions from members. Thank you, Deputy Secretary. Members who wish to speak, please press the request to speak button. Let's do 5 minutes per member, question and answer inclusive. We can do more than one round of Q&A first. Ms. Carmen Khan. I just declared my interest. For both the FSTB and the HKMA, they considered latest changes. Last year, we amended the banking ordinance to combat fraud so that banks can exchange data in a lawful way. I welcome that. That's not because I work at a bank. That's because I think that from the experience I have at a bank in terms of compliance and regulation, the HKMA and the FSTB want us to keep up with the times. I want to ask questions on 2 aspects. The first is about the proposal for establishing designated bank holding companies. Now, for controllers, their licenses come with conditions attached. So we're now providing a legal basis such that those conditions become statutory requirement. There are 2 kinds of controllers. First, those already with a local controller. Second, controllers who do not have a local bank holding company yet. So under paragraphs 4.1 and 4.2, different considerations apply for these two different kinds of controllers. So what are the factors we consider? And second, on engaging skilled persons, I welcome this proposal. Technology advances rapidly. We are now working on stable coins. We need specialists to discharge functions. So under 7.1 and 7.2 in the paper, the MA can appoint a skilled person to exercise functions under the BO. And then under 7.2, the MA can also require an AI to appoint a skilled person. Are we talking about different scenarios? So in the first case, the skilled person assists the MA with discharging functions. Under 7.2, the skilled person will assist the AI with operating. Will there be a requirement for the AI to pay the fees for the skilled person? So two questions for the Deputy Secretary. Ms. Khan is right. So in those two cases, the MA can appoint a skilled person. If it is about performing the functions of the HKMA, the expenses will be borne by the HKMA. If, however, the appointment is about helping a bank to fulfill their functions so as to meet the HKMA's requirement, a certain part of those fees for the skilled persons will be borne by the AI instead. On the first question, which is about bank holding companies, the HKMA talked to bank extensively. Mr. Chen from the HKMA can tell us about the dialogue they had. So that's for Mr. Donald Chen. He can tell us more about the considerations that apply when it comes to setting up holding companies in Hong Kong. As Ms. Khan pointed out, there is no statutory requirement for setting up such holding companies. Our proposal simply seeks to codify this arrangement. The arrangement under the amended law will be broadly the same as the current position. We require the establishment of a local holding company when none such holding company is subject to any other form of financial oversight by any authority, and when the bank holding company is either overseas or if there's a local holding company, but this bank has business in a wide range of segments. So in that case, a local holding company will be required, and there will be restrictions on the business of the local bank holding company. We want a clean bank holding company. And so that's already the current practice. So this legislative proposal will not result in a sudden need for a bank to set up a designated bank holding company. There will be a transitional arrangement for the conditions imposed under Section 70 to the new arrangement, but the content will be broadly the same.
Mr. Robert Lee. Thank you. Today we are discussing the Banking Legislation Miscellaneous Amendments Bill 2026. We have had sufficient discussions at the panel on financial affairs. There has also been discussion in the industry concerning the simplification of the three-tier banking system to 2 years, as well as supervisory powers and the engagement of skilled persons. I believe there have been sufficient explanations in the information papers. There are 2 points of concerns. 1, on enforcement, and 2, on investigation powers. From an objective perspective, there are more supervisory powers comparing with other regulators such as the SFC. Licenses could be suspended or revoked. In the future, there could be pecuniary penalty as well as reprimands. These are intermediate disciplinary powers. So those being subject to supervision well, will there be more avenues to mete out these pecuniary penalties? How can you make sure this will only apply to suitable scenarios? What about assessments? Honestly, this is a new amendment bill. Compliance costs, as you can imagine, across different financial institutions will increase, given the fact that they will have to do a lot of work, including resources, manpower, the revision of manuals. The burden is significant. From the perspective of legislation, we need to strike a balance between development and supervision. But in the end, we want to lure businesses to Hong Kong. Hong Kong is an international financial center. We have rigorous supervision, but we also need to foster a high-quality market. We do not want an excessively rigorous mechanism, so to speak. So I'd like to focus on these 2 points. We need to strike a balance between development and regulation. Thank you. Deputy Secretary. Speaker's mic off. The Hong Kong banking industry has a compliance culture. They have a good compliance culture. We have identified room under the banking legislation that there's a lack of intermediate disciplinary powers. That is why we want to empower the Hong Kong Monetary Authority or the Monetary Authority to handle different scenarios with more means. As I said just now, the industry has a compliance culture. Regarding the actual operation, I'd like to ask the Hong Kong Monetary Authority to give you more information. They can explain in a moment. That said, even after we have added the intermediate disciplinary powers, at the same time there will be an appeal mechanism in place. So the industry can rest assured in handling the cases. The Hong Kong MA will tread with caution. When the industry considers the handling of some cases to be inappropriate, they can also make an appeal under the appeal mechanism. Thank you. I'd like to give the floor to Mr. Raymond Chen from the Hong Kong MA. Mr. Raymond Chen, thank you. Thank you, Mr. Lee, for your questions. I believe the main concern of Mr. Robert Lee is the compliance cost. With the addition of intermediate disciplinary powers, I believe there is no additional regulatory requirement. This only means when someone doesn't fulfill the regulatory requirement, one is subject to a clear disciplinary power mechanism, including pecuniary penalty as well as reprimands. So in the process of our consultation with the industry, the focus isn't about the increase in the compliance costs. It's about the powers. Rectification orders, is it needed? In the process of our discussion, what the industry was concerned about was whether the law enforcement power was necessary. So regarding the issue of compliance costs, as Mr. Ho just now already said, the Hong Kong MA attaches a lot of importance to the compliance costs as well as their impact on the operation of the industry. So we have an ongoing dialogue with the industry together with Mr. Donald Chan. We have started modernization regulatory requirements. We maintain close communication with the industry. We discuss whether we need to move with the times regarding the average liquidity maintenance ratio and the average core funding ratio. I believe this answers Mr. Robert Lee's questions about compliance costs. Thank you. Mr. Vincent Chang. Thank you, Chairman. First of all, I support the legislative amendments. These amendments move with the times and reflect the latest operation and regulation of the industry. It aims to rationalize the latest banking practices and is in line with the development of Hong Kong into an international financial center. Regarding the 6 main areas in theory, I agree, but I'd like to focus on one point from a macro perspective. It's about skilled persons. During the discussion at the panel, we touched upon operational details. The appointment of skilled persons comes at a huge cost. Do the banks have a say? Do they take part in the process? Can they choose? After the Hong Kong MA has selected skilled persons, can the banks in Hong Kong lodge any appeals if they object to the appointment? What if they consider the fact that there are more appropriate skilled persons rather than those having been chosen by the Hong Kong MA? Thank you. Deputy Secretary, thank you, Mr. Chang, for your questions. I'd like to give the floor to Mr. Donald Chan to reply. Thank you. Under the legislation or the amendment bill, there are 2 to 3 scenarios. One, appointed by the Hong Kong MA, and a report has to be submitted to the Hong Kong MA. This is like the Hong Kong MA employing a staff member to work for us. That is similar to this arrangement. So in this situation, we do not see if the banks agree or not. However, in another situation, the Hong Kong MA requests bank to appoint a skilled person. Then, in this situation, the banks will have to agree before that, and the banks are at liberty to not agree. Or the banks could nominate a skilled person, and we will allow the appointment of such a skilled person. Regarding fees, when we appoint a skilled person to perform work for the Hong Kong MA, of course, the cost will be borne by us. However, when we identify issues in a bank and when we appoint a skilled person to submit a report, we may require the banks to bear part of the costs. However, as we explained just now, the banks can always make an appeal if they do not agree on the costs. When we request the banks to appoint someone to perform any work, there is an existing mechanism just like auditing. Any follow-up? It's about the appointment of skilled persons, especially when it comes to fintech and digitalization development. So under what circumstances would you require the banks to appoint a skilled person to perform work in this regard? Mr. Chen, I can explain, and afterwards I may ask Mr. Stephen Wen to supplement information. Well, when the situation concerns technologies, then we may require the appointment of a skilled person, given the fact that technologies develop very rapidly. Most of these cases concern fintech. What about other situations? I'd like to see if Mr. Wen has anything to add. Mr. Stephen Wen, please. Thank you. We provided examples in the information papers. In the course of consultation, the industry provided views saying that the scope should not be limited to just a few types of work. They are of the view that, after all, the banking industry has a wide scope of services. So we shouldn't just focus on technologies. That is the view expressed by the industry. Just now, member asked under what circumstances the Hong Kong MA would require the banks to bear the cost after the appointment of the skilled person by the Hong Kong MA. The main consideration is whether the Hong Kong MA considers there are any internal issues within the bank. If this reason applies, we may require the banks to bear the cost. However, there is an appeal mechanism in place allowing the banks to lodge an appeal. Thank you. Mr. Chen Hopfeng. Thank you, Chairman. I believe enhanced regulation of the banking industry will enhance the confidence of the public for the Hong Kong banking industry. The banking industry will be regulated, but I believe that there will be an enhancement of the reputation of the Hong Kong banking industry. I have two questions. One, if a company doesn't have any Hong Kong holding company, you require a local holding company to be set up. So I'd like to ask about the shares. Do you have any special requirements regarding the shares of the local holding company? Sometimes the shares may consist of a lot of foreign capital. Do you have any requirements as to the ratio of such shareholding structure? Under the existing mechanism, you penalize the senior management, or you do not penalize anyone at all. Now that you are going to add some intermediate disciplinary powers, it's more flexible. It may not be as serious as the revocation of licenses. I'd like to know if you can provide us with more examples and scenarios. Say if the banking system is down for, say, half a day, would you just reprimand the bank, or would you impose any pecuniary penalty? Thank you. Let's hear from the Hong Kong MA. First question on the shareholding structure. Let's hear from Mr. Donald Chen. Thank you. We do not have such a requirement, nor do we think that there is a need to do so. We do not target the source of capital. We want to have a lever for us to regulate the banking industry. The Basel principle, we are just following the Basel principle. It's not a principle that we invent. We are just making legislation clearer. We want to enhance the transparency of the legislation.
On penalties, Mr. Raymond Chen. Thank you. The proposal has yet to take effect. And for the actual implementation, we will have to look at the results of future consultations with the industry before we can say anything sure. Now, on the example cited by Mr. Chen, we encountered such cases. The reliability of bank systems became an issue. So for 1 or 2 hours, people couldn't log onto their account, and customers could not trade in shares, and they could not pay someone online. Some issues were beyond the control of banks, and those were minor issues. We get it. But then when minor issues keep cropping up, the issue itself is not huge. We cannot simply suspend a bank's license simply because a customer cannot pay someone online. But when such an issue recurs over time, public trust in us as a regulator will be eroded. People wonder, what is the HKMA doing? With the intermediate disciplinary powers, we will be able to get the banks to resolve these minor issues sooner. System reliability may not sound like a big deal, but if these issues keep happening, they affect people, and that's not ideal. We also want to show other banks that system reliability as an issue is something that the HKMA cares about just as much. So banks will step up their internal control, and this will go a long way towards fostering the compliance culture in the banking sector. That's why we propose such powers. So it's not like we take many actions and the public struggles to tell what we're doing. I'm fully on board. But we can also refer to the practice of the MTR Corporation. So when a certain problem happens, we impose a certain penalty. So that will also give banks a clearer picture about their degree of liability when a certain issue happens. So say if the system goes down for half a day, there's a certain penalty level, or when there's a data leak of customers, and then another level of penalty applies. Mr. Raymond Chan. When we prepare for the implementation of the visions, we will talk to the industry on the specifics of the implementation. For repeat offenders, the penalties will be tougher. Mr. Zhi Lapwai. I support this amendment. The world evolves rapidly. As the Deputy Secretary said, this proposal is in response to many problems spotted in the past, so I support the proposal. I do have some issues I want to discuss. First, on the 3-tier banking system, we're proposing to turn it into a 2-tier system instead. There are 11 DTCs. There's a massively different share capital requirement for a DTC to become an RLB. So for these 11 DTCs, how many of them will be able to meet the new share capital requirement to become RLBs? And there will be a 5-year transitional period. I want to find out more about this. When a DTC already meets the share capital requirement to become an RLB, do they have to wait for 5 years, or will they be able to become an RLB whenever they're ready within the 5-year window? And then for Tier 2 and Tier 3, they're not members of the Deposit Protection Committee, so they're not covered by the Deposit Protection Scheme. That scheme offers massive protection for the public. Since we are replacing the 3-tier system with the 2-tier system, can we allow those RLBs to join the Deposit Protection Scheme on a voluntary basis? Deputy Secretary. When the HKMA was preparing this bill, it had an in-depth discussion with the DTCs. Most such DTCs were able to meet the share capital requirement, and they also take a certain degree of interest in becoming a tier 2 player, meaning RLBs, on the deposit protection scheme. The Deposit Protection Committee will also conduct a review soon to see how things will work. Mr. Donald Chan can tell us more. Francis answered the first question, and my answer to the second question is that DTCs won't have to wait for 4 years. They can become RLBs halfway through the window. On the third question, on joining the deposit protection scheme, in 2027 there will be a review of the scheme. Part of that review will be whether the deposit protection scheme will apply to the DTCs. There was another question for the 11 DTCs. Do we have a number of, do we have, 8 or 9 or 10 DTCs out of 11 already meet the requirement? As far as I can recall, most of them, almost all of them, could meet the higher share capital requirements. Can you provide us with the data after the meeting? Just to give Mr. Chu the data. Any follow-up questions? No. Ms. Carmen Khan. Thank you. My question this time is about the enforcement provisions. I also welcome the clarity in this message about the strong compliance culture among banks. So we're not saying that we are amending the law to step up monitoring because banks don't follow the rules. The financial markets evolve rapidly. We have to keep up. And there are 2 more reasons I support the proposal. There are other regulators, the SFC, the NPFA, and also the Insurance Authority. There is inconsistency in the enforcement powers for the AMA across different ordinances. The paper mentions the stablecoins ordinance and also the law on anti-money laundering, and then there's another on the payment system and storage systems. So in comparison, we have to improve the provisions under the banking ordinance. The options for the MA are limited. We simply revoke someone's license in specific circumstances. There are issues that can be salvaged. Say there may be an IT glitch. To address that, more options are needed for the HKMA. That's why I support intermediate enforcement powers for the MA. Now, here are my questions. First, the commencement date. The provisions for the intermediate disciplinary powers will be the 1st of January 2028, and this is pointed out by our legal advisor. So my question is, in the meantime, what is the industry's feedback? Do they find this acceptable given the 18-month transitional period? Will there be standard procedure manuals or supervisory manuals so that the industry can follow them? And then paragraph 14. Now, when AIs engage in the regulated activities under the Securities and Futures Ordinance, the proposal now is to expand the enforcement powers against serving executive officers and directors such that the formers will also be covered. So what's the reason behind that? Raymond will take the question. So Mr. Raymond Chan. Thank you. I thank Ms. Khan for her questions. The legal advisor from Legislative also raised this question. Our estimate is that the provisions on intermediate powers will take effect in early 2028. We will have to draft the guidelines before the provisions take effect, and in that process, we also have to consult the industry to gauge their views. For other ordinances, there are provisions empowering the MA to impose a fine. So for the intermediate powers proposed here, we will also need guidelines. For our existing guidelines, we will also have to review the provisions on when the penalties will be triggered. The guidelines are, in some cases, are meant as guidance. Other guidelines are statutory in nature. Are these guidelines clear enough? That will require a review of our guidelines on when the intermediate enforcement powers will be triggered. This will require a discussion with the industry. Early 2028 is our current plan. On when we will take enforcement actions, we will consult the industry on that. Those enforcement provisions will only take effect when everything is ready. The banking industry has a strong compliance culture. There's no urgency to bring those enforcement provisions into operations sooner. There is enough time for us to talk to the industry. We want everyone to be ready before those provisions take effect. On the second question about the SFO, under the prevailing banking ordinance and the Securities and Futures Ordinance, we enforce the provisions on the conduct of the frontline staff of banks in securities and futures. So there's a term, relevant individuals, and also the executive officer in charge of securities. But the current provisions come with a limit. If a person is not a relevant individual or an executive officer, meaning if this person has left the job, the enforcement power will go to the Securities and Futures Commission instead. We had cases. Back in 2017, there was a case. It was a textbook example. When we started the investigation, the person involved left their job. So the case went from us to the SFC. And then after a while, that person got a job with another bank, and then the SFC had to transfer the case back to us. And then for whatever reason, this person left the job once again, and then the case went back to the SFC once again. We propose this change just to avoid this unsatisfactory position, and we talked to the SFC. So when someone was a relevant individual, the MA will be able to take action with this change, and we will consult the SFC for this provision. So we're not changing any standard. Thank you. I thank the HKMA for explaining, rationalizing the arrangement. On the commencement of the provisions of the intermediate powers, so will there be commencement notices? The Blue Bill does not specify a date. The date will be decided on later. So will there be subsidiary legislation down the road?
Hi.
Yes. Based on our understanding, yes. Next, Mr. Chen Hokfeng. Thank you. I'd like to follow up on Ms. Carmen Can's question. Banks have a wide range of businesses, not just deposits. taking out insurance as well as other businesses. Probably the IA will also have another piece of legislation. Are you going to bring these ordinances into alignment? Even the penalty levels differ so much. Is it possible that the person concerned would say that the correct ordinance has been invoked? Would this cause such confusion? Deputy Secretary, in the course of drafting the amendments, we have had close liaison with the Hong Kong MA and the DOJ. Probably we can ask the Hong Kong MA to give you more information. Mr. Raymond Chen, thank you. Banks in Hong Kong have a wide range of businesses, as Mr. Chen said. Banks in Hong Kong engage in insurance as well as securities businesses. Under the existing arrangements, the Hong Kong MA is a frontline regulator of the banks in Hong Kong. We take law enforcement actions on behalf of the SFC and the IA. Say for the Securities and Futures Ordinance, we are just responsible for supervising the conduct of frontline officers. What about for other non-compliances, such as illegal sales cases targeting the banks? We do need to carry out investigations. However, after collecting the evidence, it will be furnished to the SFC for further follow-up. So there would not be double standards. There would not be two sets of different standards. We are a frontline regulator, so we are responsible for conducting investigations. We report our findings to the SFC, which will then make a decision regarding relevant individuals and executive officers, as I mentioned. We have already consulted with the SFC regarding intermediate disciplinary powers. We will come to that in the clause-by-clause examination. That doesn't include securities businesses or insurance businesses. It just targets existing businesses of the bank, such as loans, deposits, and so on. Nowadays, banks in Hong Kong really have a wide range of businesses. Take loans businesses as an example. When we need to penalize a bank, the SFC doesn't penalize the loans businesses of a bank, so there is no need to conduct any coordination. Just now, as the Deputy Secretary said, and I'd like to respond to Mr. Robert Lee's concerns about cost of compliance. While we were drafting the provisions concerning intermediate disciplinary powers, we drew reference from the SFO as well as the insurance ordinance. We try to follow these provisions in order to minimize compliance costs. Any differences in provisions exist because these amendments are new. We just want to enhance the clarity on these provisions, but basically they are consistent. So is it possible that there will be double jeopardy regarding the same act? Well, Mr. Chen, rest assured, we have sufficient coordination with the SFC and the insurance authority. There's a mechanism in place to guard against double jeopardy against the same act. Thank you. Ms. Carmen Can, I'd like to speak more on intermediate disciplinary powers. I welcome this arrangement. In paragraph 12, brackets 4 of the information papers, the MA is empowered to resolve disciplinary proceedings by agreement where it is in the public interest to do so. This is the power empowered to the MA and the banks. In other words, they can resolve this by means of agreement. In paragraph 12, brackets 2, the reprimands could be either public or private. So I'd like to know if the agreement would be publicly or privately agreed on. Regarding the 6 areas of agreement, that is amendments to the Hong Kong APO and the Hong Kong Association of Banks and bylaws. You now want to give the frontline regulator, the regulating authorities, more flexibility to handle failing banks or organizations. Can you tell us how you can bring this in consistency with other jurisdictions? Thank you. I'd like to ask Mr. Raymond Chen to take these questions. Thank you. Raymond, thank you. The practice is actually similar to that adopted by the SFC and the IA. This is a settlement or agreement as a means to resolve the issue. By way of a settlement agreement, they agree to compensate the affected clients. By way of such settlement agreements, this will be resolved. Most financial institutions own up to the mistake. They know that they are in the wrong, so that they are willing to compensate the affected clients in order to reduce compliance costs. In order to reduce the compliance costs, we can resolve the issue by way of settlement agreement. Regarding whether we will make it public, we will handle this on a case-by-case basis. In my answer to Mr. Chen Hao-feng's questions just now, if we intend to show the faults so that other financial institutions are alive to this issue, then the regulator may make public such an issue. However, for other granular details, probably there is another disposal mechanism under the bill. Thank you. Donald, yes, indeed. EU, Singapore, the UK, there are similar practices as well. Take the UK as an example. In handling Silicon Valley Bank, there's a similar practice. They also need to consider any impact on the stability of the financial system. Take the example of the SVB as an example. The case wasn't as serious such that it would impact on the overall resilience of the financial system. If you're saying that this resolution would be used owing to the fact that the overall stability of the financial system would be affected, then it's not quite reasonable. So we add the element of public interest. Thank you. Mr. Robert Lee, I'd like to declare the financial institutions I serve is not directly subject to the banking ordinance. However, we hold a license that is subject to the SFC, so I'd like to declare my interest in this regard. Thank you. Just now, we have had discussions about reprimands, both private and public. This is a new element in the system. When a regulator has a preliminary judgment and conducts a public reprimand, they want to let the public know this example. However, to the affected persons, they need to know that there is an appeal mechanism following the judicial proceedings. The public may see that you reprimand a certain person or a certain company, but judicial proceedings may take a long time, probably a few years. These persons may be affected, whether in terms of reputation or businesses. These impacts could be far-reaching, so I'd like to know what mechanism is in place to make sure when the case is brought to the High Court or even the Court of Final Appeal, if the appeal is ruled in favor of the company concerned, how can you do justice to the affected company? How can you let the public know all the procedures have been completed and then that company concerned, in fact, has no issues at all? Any impact on the organization or on the person concerned may be far-reaching. A person may have to leave the industry as a result. So what mechanism will be in place? Raymond? Thank you. Concerning banking businesses, we understand well that reputation is vital to a bank. So in exercising our powers regarding reprimands, we will tread with great caution. Our powers to exercise reprimands differ from that of the SFC. We do not reprimand as often. We do tread with great caution. However, if we have already publicly reprimanded a person or a company, then the public will know. After the appeal mechanism, if it is found that our decision is not backed by substantial grounds and that the open reprimand should be revoked, we will let the industry know. We will also let other people know. These messages are public. I hope they will be handled the same way. When you identify non-compliances, but after the appeal process, I know not every single case is like this. After all procedures are completed, when the appeal is successful, you may have to publicize the end result online. You need to bring these practices in alignment. You need to make sure that people will know about the appeal result.
Now, for this appeal mechanism, as Mr. Lee said, may land a case in a court when an institution disagrees with us. This institution can appeal the case to the Banking Review Tribunal. If there is such an appeal, we will suspend the penalty for the time being, including the reprimand, until the case is resolved at the Banking Review Tribunal. But if the tribunal agrees with us and this institution still wishes to dispute the case, the institution can take the case to a court, and then the process will be open. If we think a decision is unsafe, then we will take remedial actions. No follow-up questions? What about other members? Questions about the policy matters? If not, we can start the clause-by-clause scrutiny. Members can refer to the blue bill, and that is CB 2762/2026. So we will see the long title, etc. I will invite the administration to take us through, and then members can refer to the marked up copy prepared by the Legal Services Division, that's CB bracket 1819/2026 bracket 02. I now invite the Deputy Secretary, or rather the Principal Assistant Secretary, Mr. Wong. Mr. Timothy Wong, please take us through the bill. So we will start with the long title. This is the object of the bill, that is amending the banking ordinance and other statutory enactments. There are several purposes. First, it's about the bank holding companies. We want to provide for that, and then we want to provide for the appointment of skilled persons, and third, strengthening the enforcement powers of the monetary authority, and fourth, simplifying the banking system. We'll have a two-tier instead of a three-tier system, and then there will also be amendments relating to the Hong Kong Association of Banks ordinance. There are 10 parts to the bill. Part 1, preliminary. The ordinance may be cited as the Banking Legislation Miscellaneous Amendments Ordinance 2026. Now, commencement date. Most provisions under the bill will take effect on the 1st of January 2027, with the exception of those otherwise specified under subsections 3, 4, 5, and 6. Subsection 3, this has to do with Part 4, which has to do with the enforcement powers. Those will take effect on the 1st of January 2028, as our previous discussion reviewed. The point is to let the monetary authority have more time to put in place procedures and processes to support the exercising of the new powers. And we also want to give the industry more time to familiarize themselves with the new powers. Subsection 5, which has to do with Parts 5 and 6. These have to do with simplifying the three-tier banking system. Those provisions will take effect on the 1st of January 2032. The legal advisor also asked us questions about this. I want to take the opportunity to discuss the point here. Now, for sections 59, 60, and 76(3), those provisions have to do with transitioning to a new regime. So the DTC's right to the MA, stating their desire to change their authorization from a DTC to an RFB, this has to do with the transitional period. That's why those will take effect on the 1st of January 2027. As for the remaining parts of Part 5 and Part 6, those provisions have to do with revoking, or rather deleting or repealing references to DTCs. After the 5-year transitional period is over, those provisions will take effect. That's why the commencement date will be the 1st of January 2032. Now, Section 5. These have to do with sections 218, 220, and 225. They have to do with the banking liquidity rules. So they have to do with the average liquidity level and the average core capital requirements. Banks will need time to adjust. That's why we propose a later commencement date, meaning the 1st of July instead of 1st of January 2027. Now, Section 6 part, which has to do with Part 9, this has to do with changes to the Hong Kong Association of Banks Ordinance. We want to boost the operation efficiency of the HCAP. So for the meetings, they can hold virtual meetings. There will be 2 different commencement dates. Some will take effect on the 1st of January 2027. Others will wait till the annual general meeting of the HCAP is over. Can we pause here? The legal advisor. Any follow-up? No. Please continue. Ms. Carmen Khan. Thank you. On the commencement date for Part 4, meaning bracket 3, those provisions are about the intermediate enforcement powers. The language here says the 1st of January 2028. So before that date, the HKMA will have to get ready the documents, meaning the guidelines from the HKMA, and also the discussion with the industry will have to be completed before that date. Is that the case, Mr. Raymond Chen? Thank you. Maybe I did not make myself clear enough. The provisions will take effect on the 1st of January 2028. We can look at 118X, and this has to do with the guidelines for imposing pecuniary penalties. Before we invoke this power, we will have to first issue the guidelines on imposing the penalty before we can impose the fine. So we will have to get the preparations ready before we can invoke the power. So there is a mechanism to make sure that we are ready, and then the industry is consulted before the power is invoked. Thank you. On bracket 6, on the commencement date for HCAP, have we talked to HCAP to make sure they can meet those dates? Who would take the question, please? Mr. Stephen Wen. On the commencement date, we put that based on the advice of HCAP. Thank you. Mr. Timothy Wong. Part 2, amendments relating to bank holding companies. And we can now refer to the marked up copy prepared by the Secretariat. This has to do with the regulation and of bank holding companies. We can look at page 1. This has to do with Section 3. Amending Cap 155, Section 2, we are amending the definition of chief executive. We're also inserting the definition of DBHC and relevant institution. Ms. Carmen Khan. In relation to a DBHC or a designated bank holding company, chief executive is subject to a certain arrangement. It's a controlling company. They may not need a chief executive. They have no day-to-day. They may not have day-to-day business. Is that the reason for this definition? Timothy. Mr. Stephen Wen. Thank you. Ms. Khan is correct. For AIs under the BO, there is a concrete definition for the term chief executive. That's why we have 2 parts here. Part A In relation to an authorized institution, the definition is left unchanged. We're simply inserting Part B. As Ms. Khan said, a DBHC may not have the same structure as an AI does. The language here is drafted based on the language under the Financial Institution Resolution Ordinance. Chairman, I have a follow-up question. So in relation to a DBHC, a chief executive is a person, someone who is under the immediate authority of the directors for the implementation of the general strategy of the DBHC. We define the chief executive because whenever we refer to the chief executive of a DBHC down the road, maybe this chief executive has to meet a requirement or the law enforcement actions will be targeted at this chief executive. Is that the point of defining chief executive here? Ms. Khan is correct. When we come to the amendments to Section 72A, there will be a power requiring the chief executive to submit certain information. So we have to define who this chief executive is. Under 72A, when the submission of information is required, we will be clear about who is required to provide the information. Please move on, Timothy. Page 3. Under Cap 155, we insert new Section 70E empowering the MA to require the establishment of local immediate holding companies so that this DB, the controller, can hold the controller's interest in the institution through a newly established immediate holding company. Now we come to page 5. We're rewriting Section 72A under Cap 155. So this is the definition of a specified person, a person who is an AI So we're defining a specified person. When someone becomes aware that this person is a specified person of a company or is no longer such a specified person, a written notice will have to be issued. Can we pause here, Mr. Chu Lapwai? Can we backtrack to page 3? Under Section 70E, 3C, how many days will the controller get in making the representation? Can the controller request a longer period for making the representations? Who will take the question, please? Mr. Stephen Wen. Thank you. The law allows flexibility. We don't want to specify a certain number of days, 14 days or 7 days, because we don't know how many days the controller will need. Now, we will first talk to the controller when we invoke this provision, and then we agree on a reasonable time. Ms. Carmen Khan. Thank you. The legal advisor, in referring to this provision, says that designating the relevant specified person is not part of the review process. Why is the designation of the specified person not subject to review? I will briefly respond to the point before Mr. Wen can tell us more. We need certain things to happen first before we can regulate the AIs. There has to be a designated bank holding company before we can regulate the entity. That's why we do not propose any appeal mechanism. We will allow representations, but there will be no appeal mechanism. If we cannot even require the establishment of a DBHC, there is no regulation. But on the question of how we regulate, we will then be able to impose conditions, and then the conditions will be subject to appeal or review.
Stephen, thank you. 70E and 74A, these are two steps. You can see it this way. Regarding 70E, you need to establish a company in Hong Kong. Otherwise, you could not proceed to 74A to specify this company for a certain bank. Therefore, there is no appeal arrangement under Section 70E. However, after a company has been established in Section 74A, there will be an appeal arrangement. After the establishment of the company, we cannot immediately start regulating the company. We need to wait until the company has entered the process of Section 74A before we can regulate that company. That is why under Section 74A there is an appeal arrangement. Ms. Carmen Can, well, in terms of logic, I welcome this arrangement. Now we're just going to codify the additional requirement in order to enhance regulation. You need to have a DBHC in Hong Kong. In theory, this is good. You need to mandate the establishment of a DBHC in Hong Kong. This could be substantiated. Does the DOJ have anything to add? Section 70E, not yet appointed. We just require a company to be established. At this stage, there is no impact on the interest and rights of the bank. The bank just sets up a new company to hold the shares of the bank, so there is no direct impact on the bank's interest and rights. At that stage, they can make written representations, and we considered that an appeal could be lodged. Well, I mean, an appeal could not be lodged at that stage. An appeal could only be lodged when a company has reached the stage of Section 74A. Only when you have entered Section 74A's process can an appeal be lodged. Ms. Carmen Can would like to hear from the DOJ. Is that correct? Any legal impact? Anyone from the DOJ can take this question. Let's hear from Mr. Squall So. Thank you. This is a two-limb approach. Within Section 70E, there is no appeal mechanism. An appeal mechanism is only available under Section 74A. We have already looked into this, and there is no legal issue in this regard. Timothy, you can carry on. Thank you. 0009, Cap 155 Banking Ordinance, and we add 13A. It's about the bank holding company from 74A to 74H. 74A, the monetary authority may designate holding company of authorized institution. For these institutions, they could be incorporated in Hong Kong or redomiciled entities. Redomiciled entities are also included. However, a written notice need to be submitted to state the intention. The company can also make a written representation. Moving on to 001074B, Monetary Authority may impose requirements on capital and liquidity and limitations on exposures of DBHC. These include the paid-up share capital and the share premium account, as well as other requirements. There will also be a new offense in the case of failure to comply with these requirements. A written notice will have to be provided to the company before the exercise of these powers. It will have to set out the reasons for exercising such powers. Thank you. Moving on to 0015, new section 74C. It empowers monetary authority to impose restrictions on activities of the DBHC. That includes from being a holding company of a relevant institution or of any of the relevant institution's subsidiaries, from carrying on any business or activity for the purpose of providing support to the business or activity carried on by a relevant institution, from carrying on any business or activity for the purpose of complying with this ordinance or any other applicable laws of Hong Kong. Thank you, Ms. Carmen Can. Just now on page 0010, 74A bracket 6, does it reflect what Mr. Stephen Wen referred to? That is a decision of the monetary authority to designate a holding company of an authorized institution under subsection 1 is a decision to which section 101B bracket 1 applies. However, as for 74B, as for requirements imposed on DBHC, for the requirements imposed here, these are the requirements imposed on controllers under Section 70. That is why we do not need to go through each and every requirement. Is that correct? Stephen? Ms. Carmen Can is correct. Thank you. Timothy, let's carry on. 0017 on to Section 74D. The monetary authority may specify DBHC for application of Section 71. And without limiting subsection 1, Section 71 applies in relation to such a DBHC given the requirements. Next, 0019, the new Section 74E, monetary authority may specify DBHC for application of Section 60, 63, or 64. Cap 155, as I mentioned, Section 60, 63, and 64. Mr. Robert Lee has a question. Thank you, Chairman. I'd like to go back to page 0015 of the marked up copy, 74C. It's about imposing restrictions. There are certain requirements that need to be met. So some businesses could be conducted, whereas some could not. There are some requirements to be complied with. Will these be set out in the ordinance? Or cases differ from one to another, so you will have to liaise with the licensed institution as to what could be conducted and what could not be conducted. Will you set it out under the ordinance, or will you do so under a guideline? Thank you. Donald? This provision is similar to that of Singapore and of the UK. The spirit is similar. We want holding company to be clean. We want to have a buffer between the company and the group. It is not the case that the company could not do anything at all. For services provided to support the bank, yes, that could be conducted. What about those falling outside the scope? We will have to handle the scenarios on a case-by-case basis. You can make an application to us after we have given our authorization, then you could conduct other businesses, but we do not expect this to be happening quite often. So in general, we do not expect it to be complicated. However, under some situations, if need be, the financial institution will have to liaise with you, and tailor-made terms and conditions will be added. Is that correct? For the vast majority of the cases, this won't happen. Is that correct? Yes, Mr. Lee, you're correct. Ms. Carmen Kan. Thank you, Chairman. My question is similar to Mr. Robert Lee's. I'd like to ask about regulatory concerns. When appointing DBHC, you want it to be a clean holding company. There could be banks, insurance, securities, businesses. You still want the holding company to be a clean one. I welcome this arrangement. This is a better risk aversion approach. This will help us protect the relevant stakeholders in the financial businesses. I'd like to ask about 74E. Could you tell us what Section 60, Section 63, and Section 64 means? Under Section 74E, Sections 60, 63, and 64, regarding Section 60, well, regarding Section 74E, if need be, we can specify DBHC to comply with Sections 60, 63, or 64 of the Banking Ordinance. Section 60 is about the publication of the approved financial statements, whereas Section 63, the MA could require the provision of some information. Regarding 64, the authorities can require subsidiaries or any other companies to provide certain information. In the case of the DBHC, we can require the DBHC to tell us what companies a bank holds. Then we will have a better understanding of what other businesses a banks operate in addition to holding some banks. This doesn't apply to all companies. We specified certain requirements whenever applicable. Thank you. Timothy, let's carry on. We'll go back to 0021. 74F. Monetary Authority may examine DBHC, including the books, accounts, transactions, and systems in control of the DBHC. Section 56 applies in relation to an examination under subsection 1 with any necessary modifications. Mr. Robert Lee, well, I just pressed the button by mistake. Thank you.
Page 22. This is Section 74G. And this has to do with Sections 59, 59A, 59AA, 59B, 61, 61A, 61B, 61C, 61D, 61E, 61F, 61G, 63A, bracket 1, 65, Section 67 and Section 134, subsection 1 and subsection 3, with necessary modifications, will apply to the DBHC. The requirements are really about auditing, hiring skilled persons, amending constitution and serving of AOA, etc. With necessary modifications, these provisions will apply to the DBHCs. Please continue. Section 74H, a new section empowering the MA to consult the financial secretary, and then they can exercise certain powers, and also it sets out the conditions for invoking the powers. And then with the exception of certain sections, so this has to do with sections 52 other than subsection 1, section 53, 53A, 53B, 53C, 53D, 53E, 53F, 553G, 53H, 122, and certain other provisions. They will be subject to necessary modifications will apply to a DBHC. Ms. Kan. Before we get to section 74H, there's a subsection 3. Once a DBHC is designated, within 1 month an auditor will have to be appointed. What's the reason behind this requirement? My next question has to do with Section 74H. Are these intervention powers already in existence and we're simply codifying what already exists? 74G, subsection 3. The thinking behind this is simple. The DBHC has to let us know who their auditor is. That's to facilitate communications. We may have to talk to the auditor over certain matters. We have to know that, well, we have to know who the auditor is. So the DBHC will have to let us know who's doing the auditing for them. Now, turning to Section 74H. We're not simply codifying what already exists. We're codifying existing requirements. The current position is that we have no direct regulatory powers. Section 74H is based on the existing Section 52. We regulate the banking corporation as a whole. So what applies to banks will also apply to the DBHC. For instance, we rarely invoke Section 52. That section comes in, is invoked when the bank is insolvent or when there's a major concern. We extend that to DBHCs. That's because when something goes wrong, we have to look at the bank and the DBHC as a whole. When we require an action to be performed under Section 52, or when we require the hiring of a manager, the DBHC will also be involved. That's because the DBHC controls the bank. When the bank has to vote on something, the DBHC has to make the decision. That's why we're extending Section 52 to DBHCs. That's the thinking. Now, why don't we simply reproduce Section 52 here and we are putting in a new Section 74H? That's because Section 52 is complicated. It's not like we can simply modify a few words and then apply the section. That's why for this complicated provision, which is Section 52, we are setting everything out, we're spelling things out under Section 74H. So it's not like the previous provisions that are straightforward. Here we spell things out. Thank you. I thank the HKMA for the detailed explanation. Are there provisions we have to look out for that they're different from Section 52 because here we're talking about DBHCs? So we're simply requiring the localization of DBHCs. And then in the hierarchy, in the organizational structure, the controllers further up the hierarchy may be other holding companies. So will there be other regulators, maybe overseas or in the mainland? How do we talk to those regulators, Stephen? On the differences from Section 52. Section 52 sets out the considerations we need before we invoke the power. For example, is the bank doing something that will affect the interests of the depositors? But here, the DBHC doesn't have to be doing something that affects the depositor's interest. Here, the criterion is that the DBHC is doing something that may affect the bank. Regulating DBHCs is all about protecting depositors. So that's why we bring this back to the interests of the depositors of the bank. Now, what if we move up the organizational tree? If the other organizations if their upper level controllers are covered by other financial regulators, there should be regulatory cooperation. Even if the upper level organizations are not subject to regulation and then they are overseas regulators, there is still some sort of regulation. Because the controller needs our approval before they can be controllers. The conditions imposed under Section 70 will remain in place. Having DBHCs means that we require a locally incorporated company that is distinct from other companies in the same group. And now we're proposing to regulate the banks and the DBHC in Hong Kong. That's the thinking. Thank you. Timothy. Pages 27 and 28. This is the grounds for appeal under the banking ordinance, and we are inserting FA. If someone is aggrieved by a decision, they can appeal the matter to the Chief Executive in Council. The new ground is under Section 74H 2BC. So that means powers exercised in relation to DBHCs. Let's continue. Now, page 32. Amendments to the 7th schedule. We're inserting the reference to Section 74B subsection 1. Page 33. Consequential amendment to the 9th schedule. So we can see Section 74H subsection 4. Page 34. Consequential amendment. This has to do with the Rehabilitation of Offenders Ordinance. For F, for 2E, we're making consequential amendments. The director and chief executive of DPHCs. Previously, it simply refers to authorized institutions. Let's continue. Page 38. Part 3 of the bill, appointing skilled persons and auditors. On the right-hand side on page 38, we're inserting the definition for adequate, skilled person and systems of control. Let's continue. Page 39. This is amending Section 50 of the Banking Ordinance. So access has to be given to the monetary authority for the information about the systems of control. And when the auditor is Ms. Carmen Khan. Sorry, I'm struggling to keep up. Page 38. Why this change? Why does it say includes procedure? Stephen. The terms are defined in Schedule 7. We should bring these terms forth. That's because these terms apply to the entire banking ordinance. The point is that these defined terms apply not just to the 7th schedule. These terms, the definition applies to the entire ordinance. So this is a technical change. When people want to look up what systems of control means, they have to refer to Schedule 7. Now we want to bring this forth. Now for Section 50, that section states that when the AI sets up a branch outside Hong Kong, the MA will be able to examine such non-local branches. And when we examine a branch that involves systems of control, that's why we make this express reference to what is included, what we can look at. So that's the change. Section 51D. We want to spell things out with greater clarity. That's because the systems of an overseas branch may be situated in Hong Kong to support those overseas branches. We don't just look at the systems and the overseas branch. A local branch may have a system supporting the overseas operation. So we will have to also look at the local branch, and that's for the scope of the examination. So we're spelling things out. And that way people won't be left confused. I welcome the change for 40D. The clarity is needed because overseas regulators may wonder what our regulator can do. Mr. Vincent Chang, the speaker is not speaking to the microphone. So this part is about appointing skilled persons and auditors. 52B also mentions the monetary authority. If the MA believes the appointment is no longer appropriate, then it can serve a written notice to require the institution to terminate the appointment of the professional. So what do we mean by inappropriate? When will that happen?
Stephen, thank you. Thank you, member, for your question. Section 50, not yet about skilled persons. It's about existing ones. As for AIs, if they have overseas branches and representation offices, there is an existing provision allowing the MA to request banks to appoint auditors to examine the returns. These need to be checked in terms of accuracy. If we require a bank to engage an auditor to check the returns, the auditor needs to be agreed by and approved by the Hong Kong MA. This provides greater clarity. If the auditor is found to be submitting things whose quality falls short, then we have the power to withdraw our approval. We just want to make it clear here. We can request the bank to terminate the appointment, with the result being that the bank needs to engage another auditor. These cases are quite rare, but we just want to improve the clarity of the provisions. All right, Timothy, please continue. 0043, Section 55, examination and investigation of authorized institutions. In the process, the AIs can be requested to submit books and accounts. Information about the control can also be requested to be submitted. And 0045, Section 56, production of authorized institutions books. Without limiting subsection 1, an authorized institution, and in the case of an authorized institution incorporated in Hong Kong, and local branch, local office, non-local branch, non-local representative office, or subsidiary, whether in or outside Hong Kong, of the institution must carry out the examination or investigation access to personal information. And then on to the next amendment, Part 11, heading amended, regarding audits and meetings. Mr. Robert Lee, thank you. I know this is about audits. There may not be a lot of changes here. Regarding regulatory requirements for holding companies, is there any time limit? First year, auditor, AI. In the first year, more time may be given to dovetail with the new mechanism. The provisions may not set out the date clearly, but are you going to provide guidelines so that the authorized institutions may be given more time to handle this? Stephen, thank you. If the DBHC needs to apply these provisions, the first step is that we need to appoint the DBHC first. We will liaise with the company regarding the date of appointment. There will also be clear requirements being set out. So in the process, we remain in talks with the company or the institution in question, and we will also agree on a date which both sides consider viable. So it is not the case that on the date of commencement, these requirements will apply. There will be a buffer period. All right, thank you. Page 0048, Section 59 of the Banking Ordinance amended. It's about the offenses provided regarding the appointment of the auditor. The MA can request that the the auditor could be removed. Dr. Webster, I'd like to ask about 59AA4. Is it true that whenever the MA considers, well, I stand corrected, it should be 59 brackets 3. Is it the case that in the opinion of the MA, when the auditor is considered no longer appropriate, then the appointment needs to be terminated? Is that correct? I'd like to know, when the institution does not have any power to terminate the appointment, the Hong Kong MA can just provide assistance, and in addition to that, nothing else could be done. Is that correct? Stephen? 59 brackets 3. It's not referring to financial audit. It's about section 59 brackets 2. If need be, we may require the bank to appoint an auditor to submit a report. So when it comes to the determination of an appointment, it's about this situation. Regarding 59 brackets 2, if we require a bank to appoint an auditor to compile a report, the appointment needs to be approved by the Hong Kong MA. And if we find that the report is not up to standard, then we may withdraw our approval that has been granted earlier on. And this is about how this case will be handled. It's not about the auditor conducting the financial audit. It's about the reports required by the Hong Kong MA to be compiled. If I understand correctly, the auditor reports to the Hong Kong MA but not to the institution. Is that correct? Well, in accordance with section 59 brackets 2, the authorized institution may, at the request of the Hong Kong MA, engage or appoint an auditor to submit a report. It is the bank that employs or appoints the auditor, but it is on the initiative of the bank to prepare a report to be submitted to the Hong Kong MA. It's not about the day-to-day audits of a bank. Clear? Yes, thank you, Timothy. Moving on to page 0049. The new section 59AA. The monetary authority may appoint auditors to prepare a report. Mr. Chu Lap Wai, thank you. I'd like to ask about 59AA under brackets 2. An auditor is appointed under subsection 1 on the terms and conditions determined by the MA. What about there is any disagreement? Is there any mechanism to resolve such disagreements? Under 59AA bracket 3, a report mentioned in subsection 1, that is within the period. Is there any clear explanation in relation to within the period? In case the AI considers the period not practicable, is there any mechanism for the bank to express such a view? Thank you. Stephen? Here it's not about the AI engaging an auditor, but the Hong Kong MA engaging an auditor. The auditor, if engaged by the MA, will have to act in accordance with the requirements set out by the Hong Kong MA. We engage an auditor and we request the auditor to do so. Mr. Chu Lap Wai. I mean, what if the AI disagrees with some terms and some conditions? Mr. Stephen Wen? Well, when the Hong Kong MA appoints an auditor, that is no different from the Hong Kong MA employing a staff member to work on daily tasks. So these are the requirements set out by the Hong Kong MA, and it has nothing to do with the bank. However, when the Hong Kong MA requests a bank to submit a report in accordance with Section 59(2), it is already provided that before this happens, there will be a process of consultation in which we will consult the bank, and there will also be requirements. This is the communication mechanism by which we communicate with the bank in relation to the scope of audit, the timeline, and so on. Just now we talked about the period. Is it the case that you deliberately leave it ambiguous or not clear? Because even if you ask staff members to work on something, there will be a timeline. Well, legally speaking, it's not about ambiguity in law. Auditors work according to the timetable given by the Hong Kong MA. And this varies from one case to another. Thank you. Dr. Webster. I'd like to ask about Section 59AA. Just now you said that it's not an ordinary audit. Just imagine an accounting firm works on the statutory audit and is responsible to the shareholders, but at the same time, it is employed by the regulator to work on a regulatory report. I understand there will be some conflicts, but let's take a look at Section 61. I know we are not yet there, but it is set out that there will be Section 59AA is directly under Section 61 regarding protection. There is a secrecy or non-disclosure agreement. I believe there are some issues here. Before Stephen responds, after Stephen answers this question, I will I will adjourn this meeting, and I will extend the meeting until Stephen finishes this question. I will try to answer in the most succinct yet clear manner. Section 59AA is about the monetary authority appointing an auditor to prepare a report. While engaging an auditor or an accountant, we will also take into account any possible conflict of interest. Accountants have rules to comply with. So when there is a conflict of interest, they will also consider whether they should take up the work. So I believe there is an existing mechanism to handle this. Regarding disclaimers, regarding immunity, maybe information is provided to the Hong Kong MA leading to liability on the part of the company. Well, there are provisions protecting the accountant if they act in accordance with the requirement of the Hong Kong MA. When they submit a report, they will not be held to account. So they are protected by law. Any follow-up? No. We are on page 0049, and we cannot finish the clause-by-clause examination today. So we will inform members of the next meeting date and arrangement. There being no other business, meeting adjourned. Thank you.